Let's also bring on board Jigar Shah, Senior VP and Head of Research at Kanhaiya Securities. Jigar, a fair amount of volatility for the markets after what we saw in June and them getting thrashed out. What's the approach now to investment?
Really, this is a very difficult market, and you can't, place very simple bets. Though, there are a lot of stocks and sectors where, you see, valuations tapering down to quite attractive levels. So, very simply put, my view is that you have to go for a bottom-up approach, and you have to be certainly on the safer side. Even though we find that the valuations in consumer, pharmaceutical, and IT are not the most attractive, but that is where still the safety net is, and it's better to be there if you want to be definitely invested in the market. And otherwise, look for some other opportunities, especially in the large caps or large mid caps, because the small caps are definitely no. So, I would say that it's best to avoid the cyclicals and be with the, safer stocks for now.
Jigar, what should be the approach to PSU banking stocks? Because they've been the weak point in trade. We've seen a bit of a comeback today, but would you advise investors to continue to stay away from PSU banking names, or should they selectively pick stocks there?
Well, I think that with the FY13, the issue with the government banks, NPA, etc. was over, but perhaps it doesn't seem so, and it would be worth the while to wait for some more time, and probably a lot of the chopped down valuations are justified, and one has to wait and see how the asset quality pans out, and also how the economy shapes up over the next couple of quarters before really taking a call on the cheap government banks.
A massive reversal when it comes to the banking pack, in fact, pretty much mirroring the weakness in the currency right now. The Bank Nifty is just about managing to latch into the green. So after having started off very well and after having almost crossed the day's highs, now we are again seeing a very sharp vertical downward take. And again, it is the PSU banking pack, the likes of SBI, PNB, BOB, all these names are slackling as we speak. Jigar, soon we would be approaching IT earnings. What's the take from Infi? Is a guidance cut in the price, and should one really get up for that one?
Well, I think the Infi medium term target is now set more aggressively with the change at the guard, but it is very clear that that will call for some short term sacrifices, and especially margins will take a beating. So I'm not very hopeful that there is going to be any improvement on the Infi or any positive surprise. Especially there could be some cut, definitely in the short term there could be some guidance revision or cut in the profitability. I won't rule that out, and for other stocks also there could be some amount of pressure, given that most companies are saying that they are preparing for that new visa regime, and therefore they might have a little bit of more OPEX than usual.
What about oil and gas stocks, Jigar? In light of the government's move to double gas prices, do you think your view on the sector has changed fundamentally, and what would be your top pick?
Well, not really. I think government said the price revision, and on the other hand it also made a statement that there will be some sort of subsidy for the power and fertilizer. So that does not make the policy very clear, especially in the wake of election year. I don't take this particular change as very serious, because any new government that will come to power will also have its own share of challenge, and I won't right now price this thing in, and won't take it as given. On the other hand, I think you have a stock like Cain trading at very attractive PER of 5 times, and also a good dividend yield of 4%. That is my top pick in the sector. I would say stay away from the government refining companies as well as ONGC, etc. for now, and Reliance seems to be fairly priced for now.
Jigar, always a pleasure having you with us on ET Now. Thanks for joining in with that view. That's the perspective coming in from Kanhaiya Securities.